about insurance in particular, because we're going to be doing a little insurance talk with Richard Tonica, give us a call. We'll be happy to set you straight. How we doing there, Mr. Richard?
We're doing well. Thank you for having me this morning. And before we get started, I'd like to welcome Julie Wells to the agency. She just joined as an agent within the Tonica agency, so we look forward to
excellent
working with her and helping her customers is just like we always have.
Well, very good. By the way, Richard T Agency is the website. RichardTAgency.com is the website. So what are we telling the folks today? We got to give them some good info again, as usual.
Well, I'm going to break off into a little bit of a tangent here and there along the way because some things popped up this week, and I never get through my list, but we're going to talk about the things that you need to know about homeowners insurance.
Okay.
10 things that you should know or be aware of about homeowners insurance. First off, every one of us has to have homeowners insurance, or should have. And homeowners isn't just for homeowners. It's also for people that rent. If you're renting a home, or if you are living in any kind of structure, you need to have some kind of homeowners insurance. Why? Because where your home is where all your valuables are. It's taking you a lifetime to accumulate the things that you have. And whether it's the biggest investment of having a home, or it's all your earthly possessions in your apartment or condo or whatever it is, you want to make sure that you're protected. It's taking you a lifetime to accumulate this. You've worked very hard for it. Why let it go away because of an accident, a grease fire or electrical fire, anything else, and then you don't have anything? And not only do you not have a place to live, now you don't have anything to put in a place to live. And so your renter's insurance acts just kind of, well, your renter's insurance, let's say the house that you're renting burns down and you can't live there. Your renter's insurance is also going to provide money for someplace to live up to the policy limit for your particular policy, and to help you get back on your feet. And then it's going to replace all your property and everything else that you had in the apartment that burned down.
Right.
So just like a homeowner's insurance, if your home burned down and it's going to give you enough money to rebuild or find a new home, your renter's insurance acts the same way.
Sure.
So when you're looking at this, and this goes, and it's true for both homeowners and renters, you need to decide how much coverage do you need, because the amount that you're going to need, Mike, is going to be different from the amount that Sam needs and the amount that I need. And so I used to tell people that I set it up exactly the way I want it done for my family. Well, I've kind of changed that. I mean, I still have that same basic philosophy, but what I look at now is looking at your individual needs to make sure that I'm giving you what you want, not what I think you should want.
Right.
Because they may not always be the same thing. So going in and really doing a fair assessment of what do you need. Because when you're looking at a house, you know their budget, you know what their likes and dislikes are, you know exactly what schools they want to be in, or what area of town, or you know all those specifics on finding the perfect house for someone. Well, I need to know that same kind of information for their insurance, so that when we're getting a policy together and we're looking at the different carriers, that I'm putting them with the carrier and the policy that is right for them. And when we're doing that, we're going to not only just look at your coverages, but we're also going to look at your deductibles, because it depends on how much. I mean, we all have a budget that we need to stay in. And within that budget, changing your deductible, yes, I always want a 1%. I always want it as low as I can. Have I ever put in a claim? In my life, I think I've done one claim on my house and maybe one or two on my auto. That's all I've ever done. But I still, when I do put in a claim, I don't want to have to come out of pocket very much, if anything at all.
Mm-hmm.
And so looking at the deductibles, what can you afford? What do you want to afford? Does it make sense that if you don't put claims in very much, that you move it up to a 2%. You can do that. If you're doing quite a few claims, well, you're going to have a higher premium, first of all. But I mean, keep your premium as low as you can. That way, when you're putting in the next claim, that it's going to be lower for you. And so looking at that stuff is, and whether you do there are different carriers that offer different kinds of deductibles. You can have a set deductible amount of $1,000, $2,500, $5,000, or you can do the percentage of your dwelling. And when we're talking about deductibles, your deductibles are always, when you're talking about the percentages, it's always based off the dwelling. So the higher your dwelling, the higher you're going to come out of pocket. So it's also important to look at that and make sure that we're keeping your dwelling value at the right amount, making sure that everything that is in the house is accurate. What we're saying it is in the house is accurate, but keeping that number as low and accurate as we can keep it. That way, when you do have a claim, you're coming out with as little amount as possible out of pocket.
Right.
One of the things that I was talking to I had a few events that this last week where I was out and about, shaking hands and just meeting the general public. And I want to say 80% of the people that I talked to had no idea what kind of home policy they have. And which is scary, because this is the absolute most, it's your biggest investment.
Yeah.
And you don't even know how you're protecting it. And so I was just sitting there and it's like, so you have no idea how much, you have no idea what kind of policy you have. And they're like, no, I just know that I looked at the price of the policy. I'm just like, this is one of those things that
all policies not created equal.
Absolutely not. And we've had that discussion. We'll come around back to it. But it really isn't. You've got a myriad of different home policies that you can have out there. And some of the biggest things are replacement cost versus actual cash value. If you see actual cash value on a home policy, just throw it away. Call someone that actually cares about. Call me, because it's one of those things that you absolutely do not want to file a claim with an actual cash value. And to make it simple, an actual cash value, let's say you had a roof. And this last year you had a storm, March 17th. I know that because I had a lot of customers that had that that storm hit them that day, and we've replaced a lot of roofs this year. March 17th comes, you need a new roof. It's $10,000. Actual cash value, let's say your home is 15 years old. So your roof is 15 years old. Out of that $10,000, they're automatically going to take $5,000 away. So you would normally have a $10,000 claim. Now it's already down to $5,000. After that $5,000, now let's say you have $150,000 for your homeowners policy. So now you take another $1,500 because that's your deductible. Let's just be kind and say that you've got a 1% deductible. Now that $10,000 claim that they should have been paying $8,500, now they're only paying $3,500. So you're coming out of pocket the rest, the $6,500, and it's absolutely not in your best interest. How many years did you save $100 or $200 on your homeowners insurance policy? Probably not enough to make up for $6,500.
Right.
And so looking at that, if it's a risk that you're willing to take, let's understand. That's fine.
As long as you understand, that it is a risk, but so many people don't even know. They don't know until they get hit, and then it's too late.
And that's what I tell people. And that's kind of where I was going with. That's the reason that I stopped setting it up the way I wanted it done for my family, because your risk tolerance is different from mine. And so if that's a risk that you're comfortable with, that's fantastic. We've got a product for you. There are products that are actual cash value for a reason, because people are willing to take that risk. I personally am not, but there are a ton of people that are willing to do that. And a lot of them are investors. Let's say that they didn't spend very much on the house. They're going to keep it for 4 or 5 years, and now they're going to turn it around and sell it again, they're willing to take that risk. And if you are, that's fine.
Yeah.
It's I'm not saying anything bad about them. I'm just saying, just know what you're getting into before you just look at a price and say, oh yes, I'm covered. Well, maybe not.
Yeah, I mean, you've satisfied, okay, if you got a mortgage on your house, you've satisfied the lender, you've got some coverage, but yeah, you want to be taken care of. And that's what we're trying to get across is, you know, if you have no idea what's going on with your insurance policy, and it is your largest asset, as you say, just call and talk to Richard. Spend a few minutes on the phone, and guess what? He's going to tell you, he's going to go through your policy, and then he's going to let you know, hey, man, you're in a dangerous spot here, and
Yes.
here's what's going on. And then if you choose to stay where you are, great.
Fantastic.
Well, but he's got some other options for you that are going to have you more covered, more taken care of. Hey, do you not want to take care of yourself and your possessions and your family? Yes, you do. So do the right thing. Talk to Richard about it. Hey, you're going to look like the stud, that we know you are, or the studette that we know you are, by talking to Richard. And then more than likely, you're probably going to save some money too.
Yes, get a better policy and save money. Yeah. And who doesn't want that?
And it's so important, and people don't think about it, but it really is. Well, we've kind of ran this one to the end of the line here. Let's take a short break, folks, and then we're going to come on back. See you in a few.